This quote really hits the nail on the head, because what it all boils down to is this: your mindset, how you react under pressure, and your overall behavior. That's what's going to drive your results in the long run. It's not just about what you know, it's about what you actually do with that knowledge. So, let's set up a little puzzle here. Picture two different people. They've got access to the exact same information, they see the same news, they're looking at the same market, but one of them ends up doing great, and the other, well, not so much. So what gives? The difference isn't the market. It's what's going on between their ears. To really get this, let's meet our two investors. Think of them as characters in our story. Over here on the left, you've got the reactive investor. This person gets swayed by every little headline, every bit of hype. And on the right, the disciplined investor. This person is calm, they follow a strategy, and they're playing the long game. Their stories are going to show us everything. All right, so let's put them to the test. First up, a scenario every single investor dreads: a sudden, scary market panic. This is where you really start to see the psychological cracks appear. So picture this. You wake up, you check your phone, and your portfolio is just a sea of red. Your stomach drops. You turn on the news, and all they're talking about is fear and panic. Every single instinct inside you is screaming, do something right now. And just listen to the difference in their inner monologues. The reactive investor hears all that noise, feels that panic, and their first thought is, I gotta sell, I have to get out. Their decisions are being run by pure emotion. But the disciplined investor, they feel the fear too, sure, but they filter it through their long-term plan. They knew a day like this was coming, because in investing, it always does. It's uncomfortable, yeah, but it's not a surprise. And this is why the disciplined investor comes out on top. They've got this sort of psychological toolkit. They have emotional control. They don't let fear pull the trigger. They avoid the herd mentality because they know the crowd is usually wrong when things get extreme. And most importantly, their focus is on the big picture, on years, not the chaotic noise of a few bad days. Okay, let's switch gears to our next scenario. We're moving from fear to its flip side, greed. What happens when some new hot stock is suddenly the talk of the town and it feels like literally everyone else is getting rich quick? Well, our reactive investor gets totally swept up in the story. They see the hype all over social media and that intense FOMO, that fear of missing out, kicks in hard. So they jump in. But the problem is, by the time they do, the big price surge has probably already happened. They're buying based on pure excitement, not a real strategy. Now let's contrast that with the disciplined investor. They see the hype. They're not living under a rock, but look at their second step. It's completely different. They stop, and they consult their strategy. They ask themselves, does this actually fit my long-term goals? Does it fit my risk tolerance? And you know what? 9 times out of 10, the answer is no. So they just ignore the distraction and stick to the plan. All right, for our last scenario, we're looking at what might be the toughest psychological test of all. It isn't about a big crash, and it's not about crazy hype. It's about what you do when the market is just, well, boring. When it feels like nothing is happening at all. See, patience in investing isn't a passive thing. It's not just about sitting on your hands and waiting. True patience is about being consistent while you wait. That means you keep executing your plan, you keep investing regularly, you keep rebalancing, even when it's totally unexciting. It's an active skill. And this is where our two investors really go their separate ways. The reactive investor gets frustrated. They think, this is taking forever. My strategy must be broken. And so they start looking for dangerous shortcuts. But the disciplined investor, they get it. They understand building wealth is a marathon, not a sprint. They accept the boredom is part of the deal and just keep putting one foot in front of the other. So as we pull all of this together, the real lesson starts to become crystal clear. The constant battle you're fighting isn't with the stock market or the economy. The real battle. This is the real job of an investor. It's about mastering yourself. It's about self-awareness. Knowing what makes you panic or what makes you greedy. It's about accepting uncertainty, realizing there are no sure things, only probabilities. And it's about resilience, the ability to take a hit, learn from it, and keep going, instead of just quitting. At the end of the day, you can have the most brilliant strategy in the world, but it's totally useless if your own behavior won't let you stick with it. Your psychology is what gets you through the chaos, the hype, and yes, even the boredom. And that really just leaves us with this powerful idea. Think about it. The performance of your investments is really just a reflection of your own discipline, your own patience, and your own emotional control. Look, the market is always going to throw tests at you. It'll tempt you with get-rich-quick stories, and it'll terrify you with sudden panics. The only thing you ever truly have control over is how you respond. So the real question is, which investor are you going to choose to be?